Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's the weekend. Let's recap the action. Look back at the week. The market started with the usual concerns: oil, geopolitics, and whether mega-cap earnings were just too hard to beat. But by Friday's close, bulls still had control. The S&P 500 finished just over 7230, the Nasdaq passed 25,000, and the Russell 2000 held near 2,800. That's a fifth straight weekly gain for the S&P. The key takeaway here? The market absorbed the stress instead of breaking under it. It was a constructive week, not an exhausted one. And looking at the charts, the weekly setups still look incredibly healthy. The S&P 500 finished at a record close. What does that tell us? Key support held and buyers defended the trend. The Nasdaq also extended its momentum after another massive earnings-driven week. Meanwhile, the Dow advanced a bit more modestly, and the Russell improved, though without confirming a full broad-based breakout. Bottom line from the technicals? No meaningful weekly damage. Bears still haven't forced a breakdown, even with higher oil and headline pressure. So where did the money flow? Well, this wasn't just a clean, broad market melt-up. Communication services led the charge, riding high on earnings and AI optimism. Energy outperformed as crude spiked on Middle East supply risks, and financials held firm. On the flip side, materials lagged, industrials softened, and tech participated but slightly underperformed because expectations were already sky-high. This rotation tells us investors wanted two things at once: proven mega-cap earnings power and a geopolitical hedge through energy. Over the weekend, the narrative shifted hard to geopolitics. Reports suggest Iran submitted a new proposal to end the conflict within 30 days. President Trump says he's reviewing it, but remains skeptical, leaving the door open for renewed military action. This is a massive developing story with real Monday gap implications for crude oil. If tensions cool, risk assets get a boost. If the rhetoric hardens, energy jumps, and equities get pressured. Crypto sentiment stayed firm into the weekend, which helps if the macro headlines stay calm. But don't forget, Friday's jobs report is looming, so expect some caution at the opening bell. Our first stock focus is Alphabet. Ticker GOOGL. It was a defining mover this past week. Why did it matter so much? Because its earnings proved that enterprise AI demand is turning into real money, not just capital spending promises. Google Cloud's acceleration gave the market a very clean reason to keep rewarding large-cap growth. Heading into the next session, Alphabet remains critical. It anchored confidence across the entire hyperscaler and AI complex. Next up is Amazon, ticker AMZN, another massive stock this week. Their quarter reinforced that cloud demand is incredibly strong. AWS revenue jumped 28% year over year, hitting almost $38 billion, and that matters well beyond just one company. It supports the whole infrastructure side of the AI trade: semis, networking, and data center suppliers. Looking ahead, if Amazon can hold this post-earnings strength, the broader Nasdaq leadership story stays completely intact. Our third stock is Apple, ticker AAPL. This mattered to the entire market structure, not just Apple shareholders. They posted their best-ever March quarter revenue topping $111 billion, with management highlighting massive demand for the iPhone 17. That rebound helped broaden market support way beyond just pure AI infrastructure names. So heading into the open, the question is simple: can Apple hold this post-earnings move and keep passive index support friendly? Looking at the setup for next week, NVDA is our leadership check. Now, they didn't report this week, but they remain the ultimate gauge for semiconductor conviction. It's the health check for the entire AI stack. If the market opens strong, but NVIDIA can't participate, that's a warning sign. It hints the rally is much narrower than the headlines suggest. But if it reasserts leadership quickly, that's clean confirmation that growth buyers are still running the show. Stock number 5 is BBAI AI, ticker BBAI. This is a pure event watch for the week ahead. Earnings drop on Tuesday, May 5th, and market intel is flagging some heavy short interest. That makes it a high volatility name right out of the gate. Now, this isn't a structural pillar like Apple or NVIDIA, but it is a perfect read on speculative appetite. We'll see if traders keep hunting for AI-linked squeeze setups as the new week kicks off. Heading into the open, the market's focus pivots from earnings straight to macro validation. Monday gives us factory and durable goods data, but Tuesday? That's the first major checkpoint. ISM services, JOLTS, trade data, and final PMIs Wednesday adds, ADP, and the Treasury's refunding announcement. But Friday is the real hinge point. We get average hourly earnings, non-farm payrolls, and unemployment. Consensus is pointing to 60,000 for payrolls and 4.3% unemployment. Add in the ongoing headlines out of Iran and crude oil. This is a week where risk management matters just as much as momentum. So, there's your weekend setup. Looking back, bulls earned the benefit of the doubt with another record S&P close and incredible resilience from the Nasdaq. But over the weekend, the narrative shifted. Iran headlines, oil sensitivity, and jobs week positioning. They all inject real uncertainty into the next open. So get some rest, stay flexible, and be ready for a week where geopolitics and labor data are going to move the tape fast. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.